And for business, we say hello to Kate Moody.
Hi, Francois.
While they're marching in the streets of Paris, investigators from the Paris prosecutor's office have been raiding banks this Tuesday.
Yeah, this is linked to an ongoing investigation into allegations of possible money laundering and tax evasion. BNP Paribas and its investment unit Exane, Société Générale, HSBC and Natixis were all targeted this Tuesday. About 150 French law enforcement officers searched their offices in and near Paris. German prosecutors were also present because similar investigations have been underway there. Now, the banks are accused of acting as intermediaries in two similar but complex strategies that see them help to transfer shares for a certain period when dividends are being paid. That allows investors to either not pay tax on them or to claim a rebate on that dividend tax. France's Financial Prosecutor's Office said the scheme may have cost governments some 140 billion euros over 20 years. The French banks could face around €1 billion in fines. The scandal was first reported by Le Monde and other media back in 2018, and an official investigation in France was opened at the end of 2021. Well, although unrelated to the recent turmoil in the global banking sector, the raids will add to concerns about the industry. The head of the Bank of England has said the collapse of Silicon Valley Bank earlier this month was the fastest since the 1990s. He said the UK banking system was not facing stress at the moment, but that he was on heightened alert for further risks.
I don't think we are at all in the place we were in 2007-8. We're in a very different place to then. But we have to be very vigilant. So if I give you the answer, I don't think there's a problem going forwards. I do not want to give you for a moment the idea that we are not very vigilant, because we are. We are in a period of very heightened, frankly, tension and alertness, and we will go on being vigilant. So
let's check in on the day's trading action now. A muted but slightly higher close for the major European indices. Banking stocks rose about 0.7%. Shares of those French banks that were rated were mixed. We saw BNP Paribas closing just below the flatline, just above the flatline rather. Société Générale was down about 1 percentage point. Wall Street's mixed this hour. The Dow Jones trading ever so slightly above the flat line. The Nasdaq weighing down about 0.75%. New data have showed a slight uptick in U.S. consumer confidence in March, despite the market and banking turmoil. The Chinese tech and e-commerce giant Alibaba has announced a major restructuring, splitting into 6 different units. Shares in New York jumped around 11% on the news, which follows the sudden public reappearance of Alibaba co-founder Jack Ma. Over the last 2.5 years, Alibaba's market value has plummeted some 70% as Chinese officials crack down on tech corporations. Laurent Berstecker has more.
A complete restructuring for the Chinese Amazon and another step towards big tech decentralization in China. Alibaba split into 6 different entities, including cloud computing, media, and e-commerce, will allow each business to pursue its own fundraising and public listing plans. CEO Daniel Zhang said the move was part of a years-long effort to build a more flexible corporate structure.
This transformation will empower all of our businesses to become more agile, enhance decision-making, and enable faster responses to market changes.
The split could also make it easier for Alibaba to comply with growing regulations imposed by Beijing. In 2021, the company was hit with a record $2.8 billion fine for monopolistic practices. The penalty was part of a wider government crackdown on corporate behemoths, which many say was triggered by Alibaba's co-founder himself. In late 2020, billionaire Jack Ma disappeared for several months after publicly criticizing Chinese regulators and has since kept a low profile. But his return to China on Monday after a year abroad was widely seen as a sign of reconciliation between Beijing and the private sector.
Well, China has rapidly expanded its lending to emerging economies across Africa and Asia as part of its Belt and Road infrastructure initiative. A new report now tries to put a figure on that funding, in particular to countries that are now struggling to pay back their debts. A study by the World Bank, Harvard, and Aid Data, among others, suggests that since 2008, Beijing has spent some $240 billion in bailouts for 22 countries, including Argentina, Pakistan, and Kenya. Many of those countries are now facing debt crises. Analysts have long suggested that Chinese authorities are linking such loans to Belt and Road projects. The Chinese government this Tuesday rejected criticism that it's sending poorer nations into a so-called debt trap.
China acts in accordance with market laws and international rules, respects the will of relevant countries, has never forced any party to borrow money, has never forced any country to pay, will not attach any political conditions to loan agreements, and does not seek any political self-interest.
So a not unexpected line to come from the Chinese authorities there, but we have seen over recent years, Francois, the growing role that Beijing is really playing in this whole process of debt relief, debt restructuring, especially since the start of the COVID pandemic.
Indeed. Many thanks, Kate Moody. More business news for you later. It's time.